Good morning, everybody. If you were ever in doubt that we've finished summer, today has been a perfect example of that. Lots of fireworks this morning, overnight. Morning, Kay. How are you doing, mate?
Hey, good morning, Ryan. Good morning, everybody. Yeah, ready to rock and roll.
Yeah, we started early, didn't we? Last night, it all kicked off. Yeah, these weeks started very early for us over here in the UK, and we shall get into all the nitty-gritty about what's gone on. Right. Well, let's. I don't even know where to kick off this morning. Let's start over in China. More measures coming out of officials over there in terms of getting the cogs moving. They're going to relax rules for insurers to invest in stock markets now. So measures there to get the stock markets propped up as well. They fixed the CNH or CNY midpoint at 1.2148. So it's another move up above 720, which is quite significant, although we've obviously had some big moves there overnight as well. Lots going on in the central bank front. The PBOC came out to say they will resolutely put an end to speculation in the FX market and to resolutely prevent an over-adjustment in risk. Then they added that the FX market is operating steadily and is confident that they will maintain yuan stability. That followed up what's been called a special meeting on the national foreign exchange market and self-regulatory mechanism. This was held over the weekend. They said that the renminbi remains basically stable and maintaining that stability is the common aspiration of financial management departments, FX self-regulation mechanisms, FX market members, enterprises and residents. And that the party's Central Committee and State Council will take action to resolutely correct unilateral and pro-cyclical behaviours and resolutely crack down on behaviours that disrupt market order. So those aspirations of keeping the yuan stable is a bit of a tepid warning to say don't mess around with FX anymore or we'll crack down on you, come down on you like a ton of bricks. Further to that, this morning, the PBOC announced that it's going to, or sources announced that the PBOC will be scrutinizing bulk US dollar purchases over $50 million or more, and those amounts will require PBOC approval. So clamping down further on who and how much dollars can be bought from now on. So call it intervention if you like, however you want to call it. They're still locking down on FX, even though according to them it's moving stably, obviously not stably enough. Before we move on to Japan and the rest of it, what did you make of those lines, Kay? Getting a bit stronger, aren't they, in the old rhetoric?
Oh, yeah. Definitely. The thing is, just one comment on when they're calling the yuan basically stable. If you look at their fixings, it's basically stable. That's true.
Yeah.
But if you look at the market, it's anything but stable. It's a bit like in Japan when the MOF said it needs to move in line with fundamentals, but the fundamentals in their eyes are probably not the same fundamentals that we are looking at or other market participants. Yeah, I mean, it's definitely a case of don't go beyond any boundaries. I found the $50 million threshold pretty hard, actually, because, I mean, we know that speculators can do much more than that. I don't know if they're going to play it like smart and do like 49.9 million every time they want to trade. But yeah, that is some measure, because if you want to buy more than $50 million equivalent, you need a pre-approval, which is really going to give the PBOC the possibility of just saying like, no, you can't.
Yeah.
And if you even start to slice it up, maybe we'll come and find you as well, you know. So
No,
yeah,
that's not a lot, is it? 50 million. I mean, that's peanuts. I mean, I misread it and thought they meant billion in the first instance.
no, no,
50
no. 50
million
million is
is,
very tight, very, very tight. I mean, if you are a speculator hedge fund, called the hedge fund, the asset managers, whatever, they 50 million is really not a lot. And no, that's a pretty strict measure. But then again, you recall what I've been saying over the past weeks, and again on Friday we went there and just above is that famous 2% band around their fixing, and they of course voluntarily keep that fixing low so they can monitor it very strictly. If they would be at market with their fixings, the top would be somewhere in the 745s, you know, and they seem not to be wanting to let it go any further than where they decide it can go to. So yeah, that's going to keep the speculators on their toes for sure. So if not strengthening more directly, it may just shy make the speculators like shy away, you know. Okay,
yeah.
if we can't go any further than this, perhaps we have to give up. And so de facto that may strengthening the CNH actually a little bit. But that's okay. That's one side of the pair. You have to look at what's happening in dollars as well. But yeah, I mean, they have in combination with what's happening in Japan, they really have put a lid on the dollar right now.
So wouldn't that almost bring the FX market to a halt if you're talking about deals of 50 million? I mean, in real terms, you know, when you're talking, you know, forex trading on the interbank levels, it's such a small amount. I mean, they must get, you know, hundreds of those going through each day.
Yeah, that's true. Because if you're really, even if you are an asset manager, you know, and you have like a few billion also in position, which could still be. Imagine people like BlackRock, for instance, and I'm not saying whether they have the position or not, but imagine that their model says we need 1% being short 1% of our book in yuan. That may already be $2 or $3 billion, you know.
Yeah.
So yes, it's a very strict measure, this one, which could have an impact. Because if you are BlackRock and you need to go to the PBOC to have the approval to buy a $1 billion China, imagine that the PBOC says no. So that's going to throw a lot of models upside down, you know.
Yeah, exactly. I mean, you wouldn't have taken your legs off the desk for a 50 million order in your day, would you?
Yeah, well, I mean, it depends. I mean, CNH is still not your most liquid currency, but yes, yeah. I mean, those things, they usually don't move too much the market. But if you start to do 50 here, 50 there, 50, you know, down how those funds work,
yeah.
They don't do everything in one go. And I guess that they will try to play it smart now and do 49 million every time.
Yeah, they won't get that past the PBOC. We know that for
no,
a fact.
I know. Yeah.
You can bet a few of them will try it anyway.
Oh yeah.
Anyway, right, just moving on from that, we did get, I'm not sure if it's on here, we did get some Chinese auto sales. Let's have a look if it's on here. I'm not sure it is. Nope, it's not. So I'll just have to read it out manually. So August vehicle sales were up 8.4% year on year. Versus minus 1.4 in the previous month, according to industry insiders. The Jan or year-to-date figures, Jan-August sales were up 8% versus 1.7% this time of year earlier. So a little bit of a signs of life, shall we say, at least in vehicle sales. But we know they've been putting in place you know, incentives for people to buy new electric vehicles and so on. So that's part and parcel, possibly, of that. But it does show that all these small measures that they've been putting in place might start bearing fruit. The market has been saying, you know, they need to go a bit heavier on the stimulus. China's kept it to tinkering around the various sectors, keeping it relatively small compared to what they could do. And if these sort of numbers continue, then it might work, and that will hopefully get GDP moving or activity moving overall, and then the market will be less fearful about China not disappearing into a fiery abyss. Anyway, right, let's crack on to some of the other stuff. We'll leave the Bank of Japan stuff till last. Over in Norway, we had some CPI data out and all coming in pretty much lower than expected. CPI at 4.8 versus 5.3 expected. Their core number there, 6.3, lower than expected. Was expected to jump 2 pips, but came in lower than last month and those expectations. PPI as well, coming in much softer year on year, down 37.4%. The EU Commission has cut its Eurozone GDP forecasts for 2023 and 2024. No real shock there. And now see Euro area, this is the complete Euro Union, 0.8% in 2023. Down from 1% in the prior forecast, 1.4 in 2024, that's down from 1.7. Revised down the Eurozone data to 0.8 from 1.1 for 23 and 1.3 from 1.6 in 24. So as said, no big surprise to see those numbers getting cut. Over to the US, and I mentioned last week, keep an eye on the consumer credit data. Well, it came in pretty soft, 10.4 billion versus 16 billion expected. So fairly substantial drop in consumer credit over that period. I haven't yet looked into the finer details of that, but I was on watch to see if it ramped higher, which would suggest there's problems going on for the US consumer and their finances in terms of needing to borrow more to pay for stuff rather than relying on savings and wages. But on the first glance, doesn't look like anything we need to worry about there.
Ryan,
yeah,
if I may,
yes, mate.
it's still a July number, right?
Yeah, it's still a July number, so it lags a bit.
Yeah, it lags just that little bit because wasn't it said that like from the first half of August also the consumer was pumping a bit more on its credit cards. I think we'll have to look at the August number or take the two together also to see what happened over the summer months in the US, because I found it actually a pretty low number compared to what the accepted like money flow was of the consumer. I found it actually a pretty low number compared to what we may have expected. Yeah, exactly. We actually get retail sales this week as well, so that'll be for August or July. We've got me questioning himself now. Let's see what those retail sales are going to be for on Thursday, I think. Yeah, retail sales will be August, so that might give us a bit of insight into that. Yeah. So we'll look at those numbers, but yeah, those consumer credit numbers are for July. It's a little bit lagging, but still no red flags in that numbers. But as Kay says, we'll see what the August numbers pop up with that. Yeah, as I was saying, Timmy Leaks was out with a piece over the weekend saying that the Fed is likely to pause rate increases in September, then take a harder look at whether more are needed. So that was another dollar negative influence that added on to what was going on in dollar yen as well, and other dollar pairs as well. Just a quick look back at Canadian jobs from last week, which were all pretty much tickety-boo. Everything looking okay in the jobs numbers there. Pretty solid number, 40,000 added to jobs. Participation rate dipped a bit, so we didn't see the same here as we did in the US with the participation rate jumping. That kept the unemployment rate unchanged, which might have gone up
a touch to the 5.6 if that participation rate had stayed unchanged. So maybe keeping it at 5% was down to that 1 pip lower there. Full time took the bulk of the numbers, which is what you want to see in a strong jobs number. But the big number to pull from that was the wages number. Average hourly wages for permanent employers jumped to 5.2% from 5% previously. So further inflationary pressures add into the mix in what we've seen already from the Bank of Canada. Right, let's get one little headline from US President Biden saying that China is less likely to invade Taiwan amid an economic downturn. Well, you can believe as much as that as you like. I don't think economics plays any sort of role in whether China want to do something in Taiwan. But Biden's stirring the bee's nest with that comment anyway. Right, so to the main point in hand and what's been going on. And as you all know by now, dollar yen took a big knock. Ueda coming out with a comment that they potentially might be looking at ending negative rates. The line was, it is not impossible that we will have enough information and data by the end of this year, including the outlook for wage increases next spring. There is still some way to go before the price target can be realised. We will continue our persistent monetary easing policy. We will lift the policy when we conclude that the price target can be achieved, even after ending of the negative interest rate policy. So some big lines there. Little bit maybe of translation confusion there. I sort of read that first line as saying the end of this year in terms of calendar year rather than fiscal year, particularly taking that they're looking for an outlook of wage increases next spring. But as me and Kay chatted last night, it might just be a translation thing, and it's maybe more likely talking about the end of the fiscal year, which will put it into spring next year. It is a change, isn't it, Kay? It is a definite language change, putting, acknowledging the possibility of the end of negative rates, but it needs to be said that the end of negative rates isn't the same as another central bank going on a hiking spree. Negative rates just at minus 0.10 pips is a policy step. So getting back to zero, as we've heard from other BOJs, isn't necessarily what we would call a hike. It's just moving out of negative to zero. It's another pretty big step, isn't it, Kay, towards exiting, whichever way you look at it.
Yeah, absolutely. I think this is him virtually announcing that that over time they are going to continue to normalize. Now, it is not far away from what we've been saying here all the time, and I've been always saying, like, okay, Ueda is there to normalize. The issue is going to be the speed of it, the magnitude of it, and the timeline as well. And as we heard from the Bank of Japan members lately, they're all looking at January, March, when usually in February, we're already getting a good idea about what the big unions will have obtained to as wage hikes. We have seen actually the past few months the data showing that after the prior wage hikes, the real wages are still not going anywhere. So perhaps Ueda found it necessary, and I'm starting to think that there is been a little bit of let's say cooperation, as they were saying in the beginning of Ueda's tenure, looking at also where the yen is trading, that it seems to me like a programmed sending out of a message there. But then at the same time, so there's been actually two articles, right? The first one was pretty hawkish, because he says there will be normalizing, or there could be rate hikes even after we're going to ending the negative rates. That means that they're not going to stop at 1, or they're not going to stop at 0. They are going to go into positive, apparently. That is what he's saying. But then about I think about 10 hours later, there was the second article which you picked up on, which was the one that you saw.
Yeah.
Which seemed already to water down a little bit, and I wonder if there wasn't a bit of finger slapping there, saying like, "Hey, I don't want to come out too hawkish, so rewrite that article."
Yeah.
So I'm still in doubt, because if Ueda really said in Japanese that they are going to include the wages next spring, that means, as I said, we normally have them around February. We have a pretty decent idea. That would still put us rather towards the end of the fiscal year instead of the end of what we of our calendar year. And I think there may be a bit of confusion in the market, but on the other side, where there is no confusion, is that he now gave us the hint that saying that we are going to normalize. So that in itself will already bring a bit of flows with it. And now we are going to have to really closely monitor what those JGBs are doing, because the Bank of Japan is still buying some. And then there's the kicker here is that Kishida announced that he's going to put in a bumper stimulus plan to try and get the economy and the consumer on the road again. And that's going to have a double effect, because, or an opposite actually effect. I mean, more stimulus is being traditionally understood, and by myself as well, is that it's going to weigh on the government finances and watering down the finances, more debt and stuff. But it may be that in a second, but that's going to be a second leg. That's also going to mean that they are going to have more financing needs. So that, in my opinion, still part of the first leg, is going to keep Ueda from normalizing too rapidly. So that's going to keep them on a snail's pace. But it also means that there's going to be a lot more issuances of JGBs from their side. And that could, as we have seen with the US Treasury, push the yields higher in Japan. So to me, it's going to become very complicated, this one. It is going to be complicated. I think that there's going to be a lot of forces pushing both ways of this.
Yeah.
If the Bank of Japan continues to normalize, that is where other central banks are at the end of their hiking cycle. That's also important enough. Then it should, on the flow side, push the yen back home. Some of the Japanese whales should go more back home. If on the other side, Ueda says, well, hang on, I need to help the government here, so this is going to go really, really, really slowly, then that effect can come back, bite them, and actually the yen not gaining too much. So I think it's going to be volatile, but more complicated than what we have seen. And that's the only thing I can say right now. But I think we're going to go, the volatility in yen is not to go away. That's what I think.
Yeah, no, I agree with that. I mean, the thing with the Kishida stuff, and he's expected to have a big reshuffle as well, and the press described it as enacting drastic economic measures. The measures they're putting in place, a lot of them are to artificially depress prices, like gasoline prices, by adding subsidies and everything. So, that's something that maybe is in the Bank of Japan's eye, that if you artificially depress prices and suddenly remove that those measures, prices are going to rebound back, and that's going to impact inflation in quite a quick way. It'll be quite a big snapback in things like that. So maybe they've got one eye on that, when those measures do finally end, be it 2024 or whatever, there may be a big jump in inflation, and they may want to be ahead of that game rather than caught off like the rest of the central banks are. But just to go back to Ali's point, I mean, Ali's asking why this time the BOJ comment on yields and interest rates are not impacting the yen. Well, the yen fell 200 pips, Ali. That's no small move in a currency as big as that. But you have to look at it in context. What have they done? They've done absolutely nothing. They've just talked about doing something. And they've talked about doing something potentially in 2024. Many months away. We've got a lot of stuff to trade before we get there. So this is just the market reacting. It is another step, and if you've been following this show long enough, you know we've detailed these steps all the way through. You know, closer and closer, we're inching towards an exit, and they want to keep that manageable. You know, they didn't want to turn around on day one and say 2024 we're ending negative rates, we're going to start hiking rates, we're going to stop QE, boom, 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 because that would just cause carnage. So they're very fearful of creating too much volatility. So these little things are going to be dropped, like moving YCC the first time and saying it wasn't a monetary policy move, like moving YCC a couple of months ago and saying it was to help markets function rather than monetary policy. They're drip feeding us this stuff over months and months and months. So by the time they actually get round to it, the market will hopefully have taken it all into its stride. So it's not going to react negatively and send dollar yen down to 120 in 5 days. So yeah, you've got to think of the context. I mean, I thought 200 pips this morning when it was done the 146 level this morning. I thought that was a bit of an overreaction, looking at the news versus what they've actually done, which is nothing. So you know, I think Ali, you want more than what the market is prepared to give and what the market should give. There's no way this should have been trading down at 140 on the back of that news. Might get there over the next few months if the numbers prevail in Japan and if they do move closer, but the market is still going to want confirmation. We may get to the turn of the year and the data says, actually, no, we're still far away from inflation sticking at 2%. And then you'll probably see yen weaken again. So it's all about the context. If we get further comments, if UEDA pops up tomorrow and says, yeah, you know, we're going to be normalizing at the turn of the year or in spring, fine, then you might get a bit more out of it. But he's still chucking in the caveats. We're still going to be easing. We're still not there yet. There's still lots that can happen. So no, don't be expecting 500 pip moves on this. If he turns around and says we're hiking tomorrow, well, that's a different thing. But keep your expectations in the right place. For now, we're seeing a bounce. I was looking at 146.50, you know, that old level that we had. We broke down below it. We're now back above it. So the market is saying, okay, yeah, we're taking it in our stride. What's going on? We acknowledge what you're saying, but you know, we're not happy to keep selling this pair or keep buying yen on the back of it. Now, what we have seen, we obviously saw the initial reaction when markets opened last night. Then we saw a further reaction when Tokyo fully opened. Then we saw a reaction when UK, Europe opened. Now we need to see if there's going to be reaction when US opens. But for now, I would potentially be more a dip buyer than rally seller in this one, just because I think this move for the news is a little bit big. I'm not quite ready to touch it just yet because I think there's, as Kay said, there's going to be a lot of volatility in this for a couple of sessions. So until it sorts itself out and knows what it wants to do, might just need to let it do its thing. If we start holding below, you know, 147, that was a break point up here, then I think maybe then the longer termers are going to be in rally sell mode. But we've also had that Timmy Leaks news that the Fed might be on pause in September that you know, would cement the thinking so far. So again, no reason for the dollar to gain significantly on that either. Then we've got the China messing around as well. So there's many things mounting up why the dollar in general might not see as much upside, or the upside is going to be a bit tougher, just because all the news and stuff that's been dropping in is just putting a bit of pressure on the dollar for the moment. But we've got a lot of data this week. Big data, US CPI on Wednesday. You know, dollar yen could be back above 147, or it could be below 145. Who knows? This is the market we're in at the moment. We've got to trade around the data as well. So lots to look at. Just have a look at the calendar quickly. Jobs data tomorrow from the UK is going to be particularly important as well. PPI on Thursday, obviously the ECB as well coming in there. So we get to see, are they going to hike or hold at that meeting? And we get to hear from Queen Santan as well. Friday, we get where was it? Sorry, Thursday retail sales. I mentioned PPI as well. Friday we get the Empire Manufacturing, so the first numbers of the month there. Import-export prices and Michigan flash and a bit of industrial production data too. So there's going to be lots here for the dollar to trade on, and we are going to be moving between data points and obviously those headlines. Right, so just looking, coming into some of the other prices as well. So generally, we've seen dollar pairs like Aussie dollar, Kiwi, cable, euro dollar, all bouncing a little bit. Aussie dollar, for one, got itself back above the 64. Couldn't do that last week. Now it's above. Now it's looking to climb. Does this mean we've finished with the moves lower that we've seen recently? I don't think so. This is just a further bit of pressure relief that we've seen. I don't really see anything that should change what we've seen already. But when you want to catch those knives, you need to get over these small steps. You need to build on these small steps. Nothing is significant until we get back above 65s and back above this zone. Get above there, then maybe we're turning around this trend. But until then, just these little steps need to be watched. If we can't hold them, then back down we go. Cable is another one, and look what's shown up again. 124.50. Our old mate K. It's I have no idea why this level keeps showing up. It's shown up, you know, going all the way back to the latter part of last year.
Because
here we have a double bottom potentially.
Yeah. That's because everybody is watching our show. And
yeah, exactly.
We've been banging on about that level for so long that finally perhaps somebody in the bigger players has said like, oh, if those guys keep on banging on about that level, perhaps it's a real one. So yeah. No, but it's true. It really looks like an obliged station on the metro line, right? Every time.
Yeah, I mean, look, that's to the pip on Friday. After it was sailing pretty above 125s, I managed to make a complete mess of my trade. My longs off the first test there. Those in the chat room would have read my last story about that one. But I managed to get back in last night, so not all is lost. But you know, this is a solid level, and you know, these are the ones you want to trade. We've been highlighting it long enough. You've had 2 goes at it. Now, I would be a bit worried if we came down for a 3rd test. If we get under there, then maybe then we've got further downside to come. Keep an eye on that jobs report tomorrow, because you know it's going to be the wages data that's going to be the main kicker for that. If it's much hotter, it's going to further cement a BOE rate hike. Could see this cementing the move back above 125s, but still, it's only a little step in what we've seen over the last few weeks. So more work needs to be done on that one. Arif, good to see you, mate. You went long metals, building a position, inflation, war footing, rates rising, digital currencies coming. Oh, you got lots in the mix on that one. Going off the grid, support 1900, 1890. Yeah. This one, let's have a look at gold quickly, and then I'll hand it over to the K-Man quickly. So we've got this level down here, 1916s. It's where we held the move down from, you know, up to the 1985s. I'll just take that onto a wider chart. Might be a bit useful. So part of the bigger range that we've got here, 1985s, 1885s, and then we've got all these intermediate levels. At the moment, it's holding the 1930s, which we've got this bit of a zone, 30, 35, 40. Bit of a traffic area, as you can see, going back. We're not breaking back above that, so that's your first note of caution, that we can't get above there. Get above 1940s, then at the very least you might be looking at these highs. 1916, 15, 16 is your intermediate level ahead of 1900s. So if you're long down here, Arif, very nice, keep an eye on that, but watch that 1930s. If we can't break above that, that would suggest that we're going to maybe have another look lower. Maybe we're going to move down to 1900s, if not more. But good luck with your trade. Anyway, Horatio, quickly looking at dollar CAD. Yeah, this one I'm still long. again, this has just been part of the dollar move. It's not given up an awful lot compared to some of the others. You know, it was on its way after we had the 137 test anyway. Key levels, we've got 135.5 is probably my bigger level. Got this sort of intermediate level, 135.80s to keep an eye on. The big level still remains down at 134 through those prior lows, 134.90 and down to that 134.60, 70 area. So that's still my key area if we head lower. But while we're mooching around here, there's every chance that we might have another look at those highs, but I'll keep an eye on these levels in the main. Kay, do you want to grab it and look at a couple?
Yeah, sure, mate.
Yeah, just a ratio while Kay's taking the screen. I've been wondering or noting that there's been a bit more of a hawkish, bullish bias to the Canadian stuff of late. We had obviously the PBOC, inflation ticking up. We've had that strong jobs numbers. Macklin talking more about the risks of inflation running higher. So yeah, there is more wind behind the CAD at the moment. Yeah, more reasons to be bullish CAD than bearish. But I'm still I'm happy to be long this one for now, dollar CAD, until the price tells me otherwise. Over to you, mate.
Okay, first of all, dollar yen. Okay, so we had this move, and as I've been talking about, sometimes I look at the cloud. The daily is a bit far, but we saw there's two things on the 4 hours, and that's about as low as the Japanese will go as well. They actually don't look at much lower than the daily if they look at the Ichimoku clouds, but the one thing that the market took over and then trying to extrapolate to lower time frames and stuff, but I'm going maximum down to the 4 hours. Look at where we held on the dollar yen here, and I'd say keep an eye on where this dollar yen closes compared to the 4 hours, because we also saw in the past you get inside, but then you don't drop out of it. We only had this quick drop here. When was that? Yeah, the 1st of September. We had this quick drop here, but in the meantime, in normal times, it does play a bit of a role, this 4 hour. You see this the bottom here as well. So we just went to test it. It's also a very, very thin one right now. Okay, it's starting to widen up a bit. The thinner it is, the less it provides support or resistance, by the way. The bigger it goes, the more there is to chew through, obviously. And that can create a bit bigger support or resistance if it's coming down. But keep an eye on this 145.90 for if you're interested in clouds. That's going to be a bit of a level here. It's slowly moving up now to 146.15. Just that as an in between. But globally, you know, this dollar yen. People are asking where are the supports. I'd say, well, this we've just seen one, but then if you look at the last move, and I think we have to include this move here from the last BOJ, because we are kind of, if you look at the yen, we are kind of going from one meeting into another BOJ meeting right now, because Ueda, we need to monitor what they are doing very, very closely. So if you take it from the past Bank of Japan meeting, there's a bit of support here around 145.5, but I would argue that the bigger one will lie somewhere around here in the 144s, 143.90, 144.15. That's going to be a bigger support compared to the move that we've done after the Bank of Japan. So this last low here, all the way down to 143.90 or so, that is, to me at least, the bigger support area. And I would not rule out that we are into the Bank of Japan, which is the result is still 10 days away, but on the 22nd. But I would not rule out this kind of move, you know, that we've seen in the week prior to the prior Bank of Japan meeting. And we also had a few messages sent into the market, and the market saying like, oh, they are possibly going to do something, which is about the Yomiuri article overnight was about similar, you know, on Saturday. So I wouldn't rule out such kind of move into the next Bank of Japan, which could have started. So if you overlay it, we have seen this kind of move as well, and then a jump back, which is sort of happening already right now as well. But we are going to have to stop, I'd say, anywhere where the high was after the gap open, around 147.25. If we go back up there, that means that the market is already very, very short of the dollar yen or yen pairs, and it might just go into the Bank of Japan around the prior highs. Are we breaking above? I think it's a bit of a big ask, unless we are going to see very good US data this week. As Ryan already mentioned, we have the CPI, we have the retail sales. We have a bit of what was it on Friday as well? Let me just
which one, mate?
I thought we had like some decent the industrial production in the Michigan on Friday. Okay, so there's good data coming out, decent data coming out of the US as well, which is going to influence. But again, I'm going to repeat, this one, in my opinion, is going to get a bit more complicated, at least until the Bank of Japan. So whatever I'm going to do, at least, I'm not going to take any medium, long-term view. I might try and pick a top here somewhere, but equally, I don't think that there is enough food now, unless the dollar continues to move lower. There's not enough food right now to send this pair lower. So we are going to have to wait for US data, in my opinion. And for the rest, it's going to be more volatile. All right. So watch this 145.50, 55.70 for a starter, the 145.90 that I've shown before, and then start to look at what's happening around 147.25, okay, for the dollar yen. Now, there's a few interesting other yen pairs, and one of them is this sterling yen. So I was monitoring this triangle and a bit of horizontal support. We crashed through, but for some reason in the past hour and a half, we've seen quite a bit of a move back up, you know, and we're already retesting this triangle break. So keep an eye on what's happening around 183.80, 85 on the sterling yen. That's going to be an interesting one, interesting watch, I think, for either the next hours or the close of the day, and then into tomorrow's UK jobs report. Another yen pair, of course, that's interesting to watch is this one, and I've noticed this morning. Aussie is, of course, being supported as well with what's happened in China to some extent, and also that very good hold around the prior lows and a move back above 64 in the Aussie dollar. But look at this. We're building bottoms in the Aussie yen, and knowing that it's let's say in volume likely. The second pair traded in Japan itself after the dollar yen. Aussie yen is a very popular carry trade in Japan as well. So keep a close eye on what's happening in Aussie yen, and that thing is refusing to really go down a lot. And I would like to draw your attention here to a triple bottom in the short term, and also this trend line which seems to hold. So keep a very close eye on what's happening around 93.5 in Aussie yen, okay? If that thing holds, well, I mean, that could put some support in yen carry trades still, and that meaning that investors or speculators haven't given up on shorts yen just yet, okay? I think it's really getting important to watch those process yen. If they hold, it's going to put some support under the dollar yen as well, okay? Trend line from that July 28th. trend line from that July 28. Let me just look. Oh, this one here, Gav? Yeah, likely. Gav is our level spotter, and it's really becoming our level spotter in the room. Thanks, Gav. Yeah, that one as well. Okay, we had a little drip below there on the opening yesterday, but it's really, those supports are holding, and that makes me really reluctant to dive into too many long yen positions right now. Similar on the Kiwi yen. Look at that. Okay, that's a bit of a more longer term, but that's holding even since May on a daily basis. So those yen crosses, they really hold me back from going very long yen. And by the way, I'm still not convinced about the speed of those that normalization process. I mean, Ueda has the potential to disappoint the market again, just as he did after the past Bank of Japan meeting. Okay, this euro yen was looking very breaky, and it's already back above that more medium-term trend line as well. I mean, all those little signs are telling us that the market hasn't given up, and perhaps this early Sunday night, Monday morning move was a bit of a panic move, or people thinking like, okay, now this is the right one. But all those moves afterwards are telling me that's perhaps not yet the right one to have. Okay, just quick look at the majors. I'm not really impressed yet about the euro dollar. I think the ECB should decide on what's happening there. People are still divided about whether it's going to be a hawkish hold or a dovish hike. What's going to happen with the PAPP? Is Lagarde still going to give in to the hawks? It's going to depend on whether they solely look at inflation or moving with a more cautious economic view. I'm rather of the latter, but I wouldn't rule out a test higher again before the ECB, you know, because there's enough uncertainty around the ECB for the euro dollar perhaps to have a look at the high 107s again. We've seen pretty decent demand, yeah. Every time we went under 107 last week, we have seen pretty decent demand. I think some people are preparing or managing their books ahead of the ECB already. We also have the US CPI, so people are managing their books. This is not an illogic move, even if we're short euros and still bearish euros. This is not an illogic move. Okay, we need some corrections or healthy corrections to build energy again. That if the ECB is dovish or if the US CPI is a bit higher and European data remains soft, we can attack the downside again. For the time being, I would say we are going to range here a little bit, and I would not rule out a move back up into these high 107s before the ECB is there. Ali was saying about a cable position. I'm neutral. Yes, the 124.5 held rock solid, but we haven't really retested yet the mid 125s. Which is our first level of interest. Again, we are going to have a test tomorrow for the sterling on the jobs report. I think CPI is only next week in the UK, and then the Bank of England also next week in the UK. In the short term, you can be right for this little move if you really do it like very cautiously and rapid fire positions. But for me, this is neutral within these 100 points. I think it's quite significant that we held down there. But are we ready to start going higher, back up to 126s? The jury is out on that one. I think it looks to be underpinned, and all those currencies are seen now underpinned by some yen pairs as well. The sterling yen, the euro yen. You look at the commodity currencies yen. Yeah, I've got a little more nuanced view on the Canadian dollar. I'm not saying it's given up. but I am just saying that those several attempts to break above this resistance zone, traffic zone, it's looking failure. It's looking like a failure. We really are going to grab the 136.5 40-50 zone relatively quickly again to continue to go, and then we are still going to have to wrestle with this trend line above here in the low 137s. But in the meantime, that looks a little bit like failure-ish to me. Of course, there's a 135.5, which is probably going to act like support, and then we are going to get the bigger one here around 135 top, bottom for a jump, bottom for a jump, bottom for another, for the final jump. So that's going to be your big zone, in my opinion, on the dollar Canada. But in the meantime, it looks a little bit running out of gas here, right? And I wouldn't be surprised if the dollar remains relatively on the defensive elsewhere, that the dollar Canada could just go and have a test. I think for somebody who is in a more medium-term position, and I know Ryan has been taking off slices as well on the way up, so you must be looking pretty okay on your longs. For medium-term longs, I think really the risk is here. As long as it holds 135, we cannot rule out that it's going to continue, right? That's the more medium-term view.
Agree with that, mate.
Sorry?
Agree with that, mate. Yeah, it's funny. We're seeing dollar yen bouncing. We're seeing dollar China bouncing. But we're not seeing any other dollars really bouncing just yet. So dollar CAD not on the bus.
Looks all crosses, huh? But look at the Canada yen does the same thing as these commodity currencies yen. Look at that. That support here. Bam, bam, bam. We went to test it, and it's holding. I mean, it's a bit of a funny one here. What's going on all those yen crosses? That really seems to me that speculators or more medium term traders are not yet worried about the whole thing. There's one that I'm keeping a very close eye on here, and I'm actually very, very fast jobbing here, but this looks a little weak still, in my opinion. We are going to have have closes, and ideally daily closes above 146 to turn it around and go back higher. It looks a tad vulnerable to me still in this Euro CAD. But really to get lower, I will need a confirmation below 145.70, 75. And then I would feel a little more comfortable with a short position. For the time being, is just hopping around here, just under or around the 146 zone. Okay, that for the thing. How about sterling CAD short? I'm not really trading that pair, to be honest. I'm not really trading sterling CAD, to be honest. As you can see, I haven't updated the chart for quite a while. I really don't know, Horatio. Yeah, it's rejecting. But then is it breaking yet? We are on support, okay? We are on support, right? Okay, if it breaks here, it could trade a bit lower. But then again, what do you do with your position into tomorrow's labor report? If you want to trade this break, I'm not saying it's not going to come today, but why not rather wait tomorrow, right? Okay, and that's it for me, Ryan, for today.
Thank you very much, mate. Yeah, lots going on to kick off the week. So trade safe. Just maybe see what traders in the US want to do with this dollar moves, dollar yen in particular. I think 147 is probably our key level from here. If we finish today above it, then we've probably traded out the Bank of Japan and back on the old bandwagon. If not, then maybe there is further nerves going into that as well. Anyway, hope you have a great week this week. We'll be back tomorrow to see what's happened over in the UK, and have a great week's trading. Thank you, K-Man. We'll see you all tomorrow.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.